Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me, as always, is Snehi Shah. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the markets are shaping up. Snehi, since yesterday we are seeing this recovery coming in the market. Today we are, very, very range bound, but today is also the last day of the week, so pretty range bound. We are trading within the previous day's range.
Absolutely, looking very lackluster today. What started as a very good day on the street for us, despite global markets being jittery, we've been on a solid footing ever since then. But nonetheless, we've given up some of the gains because we did manage to cross 22,600 on the Nifty, but we're 70-80 points off the day's high today. Broader markets are also mixed right now. You have Nifty mid-cap that slipped into the red. The small cap index is doing all the heavy lifting once again. More than a percent gain, or almost a percent gain, 8 tenths of a percent gain coming in on the small cap index. That has also come off quite a bit from the day's highest point. Sectorally then, you have media, metal, energy, auto and pharma that's in the green. On the flip side, realty is taking it on the chin today, and IT as well, a 1% cut across both of those indices. Nifty Bank, PSU, FMCG, these are your sectors in the red. Some stocks we're talking about from the Nifty pack, it's Reliance, once again a 3.5% gain. Nestle, BEL, Bajaj Auto, Adani Ports, Britannia doing well. The FMCG pack seems to be holding up well on the back of the palm oil prices coming down. On the flip side, IndusInd Bank, NTPC, Shriram Finance, Infosys are weighing on the indices. That's what the market construct is looking like right now.
All right, let's move on then and get you all the buzzers that are buzzing in trade today. And for that, we're joined by Arpit Beriwal, who's Manager Directives, Analyst Equity Research, Motilal Oswal Financial Services. And from our research team, we're joined by Ravinder. Hi, good afternoon to both of you, and thank you so much for joining us today. And let's get started with all the buzzers then. First up is Quest Corp. In fact, in morning's trade, Quest Corp was up almost 6%. It has given up those gains, but nonetheless trading with gains of 2.2% as of now as well. Now, this is on the back of the fact that the National Company Law Tribunal Bangalore bench has approved Quest Corp to demerge into creating 3 publicly listed entities. Following this, Quest Corp will continue to house India's largest workforce management company with a headcount of over 5 lakh and a footprint of across 9 countries, along with 2 new demerged companies as well. On the back of this approval for demerger for Quest Corp is buzzing away in trade right now, trading with gains of over 2%.
Okay, good day coming in for Quest Corp, but let's move on. And Arpit, hi, good afternoon. You've picked out Shriram Finance for us, a nifty name. And today trading with cuts of about 2.5%. Yesterday we had a credit rating news also coming in. What's the outlook going ahead on the charts for this one?
Yeah, very good afternoon. First and foremost, wishing you all a very happy Women's Day. So starting with, if you see overall the setup of Shriram Finance, if you see overall NBFC has been quite resilient in last couple of weeks. Especially talk about Shriram Finance or Bajaj Finance. So technically, if we see the setup wise, when the market was in corrective move, Shriram Finance formed a strong base near around 550, 560 levels on the weekly, on the monthly scale, and slowly, steadily the stock is moving higher. So if we see on the daily setup, a stock has seen a good move from 570 to 630, 650 levels. Today, some cool off is seen from the higher levels, but if we see the setup wise, originally multiple supports are seen near 610, 615 levels, and as overall NBFC space is outperforming, so this stock is likely to outperform. So overall setup wise, some on the buying can be bought at some dip near 610, 615 levels with major support of around 580. So slowly steady the stock can move towards 660 and then 680 zones in coming sessions.
Okay, so that's the outlook coming in on Shriram Finance. Let's move on, talk about a stock that's holding up pretty smartly in today's trade, and that's RITES. We are talking about on the back of an order win coming in. The company has received a letter of acceptance from the South Central Railway for conducting the final location survey for high-speed elevated rail corridors between Hyderabad and Bangalore and Hyderabad and Chennai. The contract, that's valued around 28 crore rupees, involves preparing a detailed project report, final alignment design, traffic survey report, return on revenue calculations, a detailed estimate and EPC documents for these 2 projects, and this project is expected to be completed within 8 months from the signing. So on the back of that news flow, RITES holding up with gains of about 3.5% in today's trade.
All right, moving on then, besides RITES, there's another counter that is in focus today, that's Bajaj Finserv. Tell us, Rapinder, why is this particular counter in focus today? What's the news flow?
Well, as Bajaj Finserv is in focus, where company has announced the monthly business update for its two subsidiaries, Bajaj Allianz General Insurance and Bajaj Allianz Life Insurance Company, whereas Bajaj Allianz General Insurance Company's gross direct premium underwritten for the Feb was at 1219 crore, and up to the month of Feb 2025, it stood at 20,006 crore. And if we talk about another subsidiaries, Bajaj Allianz Life Insurance Company, the company's total premium was at 1,080 for the Feb month, and for the period of April 2024 to Feb 2025, the amount is 10,469 crore.
Okay, so that's the outlook coming in on Bajaj Finserv and why that stock is in focus today. On that note, we'll slip into a very short break and see you on the other side, where we'll keep it going with more big buzzers in today's trade. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus. And Arpit, you picked out NTPC for us on the charts. It's a stock that a lot of analysts are talking about these days. Tell us what makes the chart look so attractive. Last 6 months, we've seen a 15% cut coming in. But this week seems to have been a decent one. We've seen a 6.5% gain coming in on the stock just over the last 5 trading sessions. So what's the outlook on the charts going ahead?
Yeah, so if you talk about NTPC, the chart structure, if you see from almost from September, October series, the stock was in downtrend. However, if you see the chart setup of last 2 months, from January series till so far, in last 7 to 8 weeks, the stock is from a strong base near 300 levels to 320 levels. This week it has given a classical range breakout above 328, 329 levels, strong bullish candle. On the daily scale, it has managed to surpass about its 50 DEMA. So clearly a kind of a good base formation on the daily scale with a double bottom pattern near 300 levels, and on the daily scale holding well above its 50 DEMA. So opens the rooms upside for another 5 to 7% rally. So technically setup wise, till it holds above 325, 326 levels, definitely the stock can move towards 340, 350 levels in the medium term. On the immediate basis, major support is seen around 318 levels for an upside move towards 345 to 350. Along with that, within all the PSU stocks, NTPC has relatively outperformed. So looking at the chart setup wise, definitely the stock can outperform in coming sessions also. So this would be a preferred pick within this space.
Alright, moving on from NTPC on the charts to another counter that is in focus today, Ravindra, that's BEL on the back of a big order win. Take us through the details of this order.
Electronic is in focus, where company has received an order of rupees 577 crore, and the major orders include airborne electronic warfare products, advanced composite communication system for submarines, and Doppler's weather radar, train communication system radar, radar upgradation, spare services, etc. With this, the total accumulated order received by BEL during the current financial year stand at 13,724 crore. So, and on back of this news, stock is up almost 2%.
Okay, looking good for BL right now on the back of that big order win coming in. Arpit, coming to you, you've picked out JSW Steel for us. Now, metal stocks have been on a tear over the course of the week that went by. 8.5% uptick coming in just on Nifty Metal Index. If you pull up this stock, then year to date, this stock has given a decent 11.5% return. 1 year, it's been up 20-odd%. What's the outlook going on the charts? It's been a steady performer, but do you believe this steadiness for the stock can continue?
Yeah, so if you talk about over the metal pack, metal index has been very strong in the last couple of weeks. And if you talk about JSW Steel particularly, if you see the monthly chart, this is the one of the strong counter that is still in uptrend in spite of the market carnage that we have seen in last couple of months. So technically on the monthly scale, it is forming strong bullish candle. The structure of high lows is intact. On the weekly scale, last week it gave a range of about 960, 970 levels, holding well above the same. On the daily scale, it has managed to surpass this 50 DEMA. And looking at the chart setup wise, it's just a couple of points away from its life highs. So looking at the setup wise, as metal index is likely to dominate and likely to be bullish in coming weeks. So JSW Steel is likely to outperform. And looking at the setup wise, after a long time, it is able to hold above 1000 levels. So definitely it can scale new life highs towards 1050, 1080 levels. So JSW Steel, one can go long at current levels or minor dip in between 1000 to 1010 with keeping stop loss of 965 for an upside move towards 1070 levels.
Okay, that's the outlook on JSW Steel 1070 on the upside. Let's talk about a high flyer once again in today's trade, and that's Big Boy Reliance. Back-to-back brokerage notes, and today also we have a note coming in from Macquarie on this stock. Macquarie has upgraded the stock to an outperform, target price at 1500 rupees per share. Remember, yesterday we had a Jefferies note that came out with a buy rating, target price of 1660, and Kotak Institutional Equities had also upgraded the stock to a buy rating yesterday with a target price of 1400. Today, Macquarie's target price is 1500 rupees per share. They believe Reliance's share price has underperformed MSCI India by 18 percentage points and Bharti Airtel by 60 percentage points over the past 1 year. Now they've upgraded this stock, noting a series of incremental positives over the next 6 to 12 months. Looking ahead, they have also changed their estimate, the CAGR estimate. They have forecast this improvement to 15 to 16% FY25 to FY27 relative to the past 2% EPS CAGR in FY23 to FY25. They're spotting some catalysts for growth, better earnings momentum, Jio's potential listing and gradual commissioning of new energy capacities is what Macquarie is lacking. On the back of this very bullish note, this stock is trading with gains of more than 3% in today's trade.
All right, Reliance in focus today on the back of those upgrades coming in from the brokerage notes. But Arpit, you have also picked out RIL for us. Now, in the last 1 year, the stock hasn't really done much. Is it time for the stock to re-rate now?
As rightly mentioned, the stock has largely underperformed in last 1 year, and if you see the monthly setup from last 8 months, the stock was forming lower highs. However, if you see the setup wise, the last few weeks and the last few days, especially in the last few days, we have seen a strong recovery from the lower levels, that is the lower band of the channel around 1160 levels. And in the weekly setup, it's formed a strong bullish candle with long lower shadows that clearly indicates that a strong buying interest is visible at the major support zone. So look at the chart setup wise, after a long time, almost after 3 to 4 months, it has managed to surpass this 50 demo on the daily scale and holding well above the same. That clearly indicates that recovery in Nifty is mainly led by Reliance. So I think from here on also, we can see some more bounce back move towards 1300, 1320 levels. So the risk reward is quite favorable at current junction. We can go long at current levels or minor dip in between 1240 to 1245 with keeping stop loss of level 90 for an upside move towards 1320 zones.
Okay, on that note, we'll wrap it up on this edition of Market Fatafat. From Ankita, me, the team that put this show together. Thanks so much for watching, and Arpit and Ravinder, thank you so much for joining us. It's a goodbye from me and the team. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.